A call comes out of the blue. A polite, educated and seemingly friendly voice on the other end of the line offers you an investment opportunity that's just too good to ignore. You're offered shares in an up-and-coming company at a bargain price. The caller on the end of the line tells you everything about the company, the market it's trading in, and why the share price is set to rocket. Trouble is, you're put under pressure to snap up this offer straight away. So what do? Or do you kiss the god of fortune for winging this chance your way? Or do you ask for time out to think about it? Put the phone down and contact this office, the UK's Financial Services Authority. These are the people that can tell you whether the company whose shares you're being offered is a legitimate concern and whether the brokerage house offering to do the deal is a bona fide company and regulated by the authorities. Sadly, hundreds of you have taken the first option and promptly lost on average £20,000 each to the fraudsters. And yes, whilst these cold calls do con even experienced investors, such losses can be avoided by exercising a modicum of caution. One person who's been investigating frauds and scams for more than 25 years and advising the FSA on protecting consumers is financial journalist Tony Hetherington from the Mail on Sunday. So who better to ask how to spot a scam and sidestep it? So Tony, first of all, put us in the mood to be taught a lesson and let's hear your scariest stories of how ordinary Joe Public has lost out to clever scams.
There are lots of tragedies involved in fraud because although people might think from the movies of Leonardo DiCaprio playing silly games and putting uniforms on and passing himself off as an airline pilot and that sort of thing, fraud actually has a much seedier side, a much more tragic side, and sometimes people do commit suicide because they have lost everything. After a lifetime of work, they have lost their savings, they've lost their home, they've very possibly lost their family to fraudsters. They have nothing left to live for, and they end it. And that's the tragedy of fraud. That's the side that we don't hear very much about.
So what happens to these people then? How do they get sucked into these scams in the first place?
Often it's an innocent-looking approach in the first place. Somebody offers perhaps a free subscription to a newsletter, an investment newsletter, or they invite you to invest a few £1,000s in their latest wonder share, which surprisingly then over a couple of months does very well because the price is being manipulated by the bad guys. Then they come along and say, just think what you'd have made if you'd put £50,000 in or £100,000 in. You haven't got a mortgage on your house. Why don't you mortgage your house? You could afford to put an awful lot more in, and we've got another share coming up that will do just as well. You could really double your money, triple your money within a matter of months. And people do fall for this, I'm afraid. They've been sucked in, they've seen that it works once, and they fall for it again.
And presumably there aren't that kind of available sort of referrals to people who could actually put them right and say, watch it, this is not what it seems.
There are agencies that will do this. The Financial Services Authority in Britain is an obvious one. The trouble is that many people don't know where to look to see the warnings. Often it's as simple as going onto the internet and typing into Google the name of the stockbroker who's offering you the advice, and you will find that other people are raising questions and asking for awkward bits of information and getting no answers. That's a warning sign. That's a real warning sign.
So what sort of inducement product do they offer?
A group of corrupt brokers seem to have sat down and asked themselves what shares would appeal to the sort of people you can get on the phone at home during the day. Now, mainly that's women who are at home. So they came up with a share in a company that built artificial limbs for crippled racehorses so they wouldn't have to be shot. And then they hit the phones, and a large percentage of the people who answered the phone in the middle of the afternoon fell for the story, invested, and the share price went up. And these chaps made so much money working from their unlicensed boiler room, as we call it, broking firm in Spain, that they moved up the coast into the Pyrenees. They went to Andorra and set up their own little bank on the ill-gotten gains that they'd made out of selling shares in the Horses Leg Company.
Gosh, I mean, you talk about them moving to Andorra and setting up their own bank. Presumably, in these days of a much more stringent anti-money laundering regulation and supervision, that couldn't be done anymore, could it?
I would hope it couldn't be done, and in fact the story has an almost happy ending because the Andorran police arrested them for bank fraud, not for the fraud they'd already committed in Spain, but for bank fraud, and they were jailed. So it didn't work out for them in the end, for the crooks, but it is still possible to set up a bank or a near bank, a company that takes deposits, that pays interest. It may not be the sort of company that will issue you with a Visa or a MasterCard, but it will look like a bank, it will sound like a bank, and it will probably be based in, say, the Caribbean on one of the small islands, or possibly somewhere in the Pacific Islands, some small jurisdiction where getting a banking license is easier than it should be. I think a key thing that anybody in the world can ask themselves when they're offered a deal that sounds a bit more attractive than it ought to be, if it's overwhelmingly attractive, somebody offering you 1,000% per month, you know it must be a fraud. But if somebody is offering you just that little bit more than you think is feasible, particularly in the current low interest climate and in the wake of the world financial crisis, then ask yourself just one question. It's a bit like the bit in Ghostbusters. Who are you going to call? If something goes wrong, who are you going to appeal to? Look at the jurisdiction where these people are based. Do you know the regulators there? Do you speak the language there? Do you know what the law is there? Do you know whether these people even need a license to do what they're doing? There are lots of new schemes for parting you from your money that are coming up all the time. But ask yourself that one question. If it all goes wrong, who am I going to complain to? You can't go to the Financial Services Authority in Britain because the chances are these people are offshore. They're not licensed by the Financial Services Authority, which has no jurisdiction. Go to the police then. Can you imagine walking into a local police station anywhere in the world and saying, well, a chap rang me from Spain and offered me an investment in growing trees in Costa Rica. Teak is a very profitable tree. The company itself was registered in the Caribbean, and I sent my money to a bank in Florida. You can just imagine the police officer on the desk, the eyes glaze over as this poor copper wonders, what the heck am I going to do? His first thought isn't, yes, I'll get straight on to Interpol. His first thought is to say, well, sir, that's a civil matter. Please go and see your solicitor. Because there's nothing in practice that's going to happen. The fraudsters are very good at mixing jurisdictions. They will work from one place, they'll have their victims in another, they'll keep their money in another, the product will come from another. There is no one body or one person that you can complain to who is going to have any earthly chance of investigating this and getting your money back. And that's what consumers want. They want an investigation. They want people arrested. They want their money back. But their money is long gone by the time they've realised it's a fraud. One of the difficulties we have on the consumer panel on which I sit that advises the Financial Services Authority is getting across the difficulty of cross-jurisdictional fraud. And as world boundaries come down, partly for political reasons, partly as a result of the internet, partly through organisations like the European Community, the European Economic Authority, making it easier for companies, legitimate companies, to work across borders. It also makes it easier for the fraudsters to work across borders. In some countries, it's very easy to get a licence to practice as a stockbroker or even a bank. And yet the theory is, within the European Economic Area, that if you've been passed as fit by one regulator, all the others, and there are about 30 in the European Economic Area, should accept you as well. So it's called passporting. So if you get a banking license in one of the Baltic states, or in the old Soviet Baltic states, to practice as a stockbroker or a banker, you're automatically accepted in the City of London. And it's very difficult to keep you out because the whole ethos, the whole pressure from Brussels is bring down the boundaries, abolish the borders, practice across the whole of Europe. And that has a downside as well as an upside.
Because it allows fraud to spread like wildfire across those boundaries.
They won't call it fraud in the beginning, but by the time they find out it's fraud, it's too late.
Tony, we are now well and truly scared, and I have to say, on behalf of everyone, thank you very, very much. That is such useful advice. Thank you.
You're very welcome. Being scared is a good thing to be sometimes.